What's up, people? Welcome to this episode of the Buy the Hood podcast or webcast because I don't know how you're consuming this content. I'm your host as always. My name is Jimmy. We have a very special show for you this evening. I got my partner Corey in the building. Corey, how are you, sir?
What's going on, Jim? How you feeling, man?
Oh man, I can't complain. Ain't nobody listening, man. But fair and partly cloudy out here, man. Um, Listen, it's tax season, man. 2020 tax season is upon us, so we want to have a special episode, special for a lot of reasons. This is our first return guest since we launched this webcast. This brother is a financial strategist, tax advisor, and we want to bring him on to ask him several tax questions that could possibly help you as you get ready to navigate. I know a lot of y'all getting y'all W-2s. It's the end of January. I know y'all stalking the mailman and whatnot. But we want to ask some tax questions. I had some people send me some questions. So we're going to bring him on to have a conversation about taxes. This is our brother returning, Camari Ellis. How are you, sir? The financial rebel, they call him.
What's up, brothers? How y'all doing? Jimmy and Corey, how y'all doing?
Oh,
What's
man.
going on?
It is what it is, man. I'm still trying to help the people, man. But
Man, y'all making me feel special out here. I'm the first returning guest.
yeah, man. Listen,
Y'all done had some heavy hitters on here, and I'm the first.
this is your season right now, man. Got to bring you on for your season. I know this is
Okay.
this
It's
is
timing. It's
yeah,
timing.
this your season. I mean, plus our last episode was amazing, man. We always love to chop it up with you because you have a lot of knowledge when it comes to investment and taxes. And let's start with that. We mentioned it last time we had you on, but before we even get into specific questions, when we talk about wealth building, right? And I always like to ask you this because I think a lot of people miss out on this. People jump in, talk about the real estate, the stocks, the crypto, the option, all these things.
All the sexiness.
But but a lot of times people don't focus on taxes. So, in your opinion, what role do taxes play in wealth building?
Man, taxes is the biggest enemy to wealth building. So if you don't have a tax plan, you don't have a wealth strategy. So I would advise everybody to be very serious about their taxes because when you think about it, the average, well, I won't say the average, but tax rates 25% for federal income tax. We're in Pennsylvania, so you got 3.07% right there. If you work in our lovely city of Philadelphia, that's another almost 4%. So right there, we're knocking on 35%. Let's not add up real estate tax, sales tax, those little special funky taxes on your cell phones. When you go buy a hot dog, there's tax on everything. So it behooves you to be very aggressive, be legally aggressive about reducing your tax bill.
Yeah, and sometimes people say, well, that's only when you get to a certain level should you worry about a tax plan when you got a couple million. But yeah, I'm pretty sure you agree with this. Everybody should have a tax plan, right?
Yes, sir. It
Okay.
might be more simplistic as you're at a lower tax bracket because you're eligible for a lot more credits and the benefits. But as you rise in economic status, there's also other things available to you as well. So in my opinion, anytime when you see the government just misappropriating funds all the time, just losing money, people just, we got the president gotten people going to spend the night at his hotel, and using government resources for that. That's misused money. The money not going to help the people. If the money was really going to help the people, then I would say, hey, pay as much as possible. But that's not the case.
Yeah.
The famous Tupac song or line, they got money for war, but can't feed the poor. I mean, that's real. So if our money was really going to feed the poor, then it would be a different situation. But that ain't the case. We know it ain't the case. So be very aggressive about reducing your tax bill.
Yeah, and I think a lot of times people get caught up in not even understanding that a lot of things that go on within the courts, within the government, that's your money that's using. Like a lot of people don't they disassociate themselves from it and don't recognize that that's our money going to work for whatever it may be.
Everything from the police officer, everything from the firefighter, many of the hospitals that are being operated out here, to president, judges, social workers, the whole nine.
People, that's your money. That is your money, right? But let's get into some questions. I got some questions here that people sent me in because it's tax season. There's been a lot of talk about the W-4, right? So a couple questions about the W-4. Before you get into the changes, what exactly is a W-4? And people ask if you. And I guess the new question about the changes may actually answer the second question. But someone asked me, once you fill it out, is it possible to change it in the middle of the year, and should you?
Yes, you could change it. You should change it when your status changes, right? So, for example, let's say you were single, you had a fiance, then y'all jump the broom and y'all get married. That's a reason to change. If you have a baby.
Well, step back real quick before you get into that. What is a W-4 for those like people that may not have any knowledge? What exactly is?
I'll give you the official title. It's the Employees Withholding Allowance Certificate.
Okay.
The W-4 tells your employer, if you are self-employed, you don't have to worry about this. If you're a business owner, you don't have to worry about this unless you are on your own company's payroll. But it's basically it's giving instructions to your employer of how much federal wage tax you want to pay. Okay. At the end of the day, that's what it's telling.
Okay. And you're saying that you can change it, like if you have a change in status. So if you get married, or let's say you have a kid. If you have a kid, could you change it if you have a kid?
Yes, you can change it if you have a child. There's a lot of different reasons why you might change.
I've heard people talk about being strategic. Like, and again, this is like, I don't know whether they should be or not, but I've heard someone say that.
Knew it was coming.
Yeah. They say, I'll do 3 months this, 6 months that. I'm like, I don't know. Like, I don't know whether you can do that. Like, it's not my field of expertise.
I mean, listen, you can do it. They used to do it a lot more, or was a lot easier to do back in the day. People will claim 9 children. They single or they married. They got 9 children. So in that way, none of the money is actually, no real money is coming out of their paycheck. But what people don't realize is the government got slick to that. See, the IRS aren't dummies. Mm-hmm. So they sent out what's called lock-in letters. I want to say lock-in letters. The IRS will automatically tell your employer to withhold this amount of money from your check if they see that you are abusing that privilege.
So it's a cat and mouse game, basically.
Yeah. But you can, listen, if you get into a tight jam and you need some extra money, you need some extra cash, you could adjust it. You could be a bit more aggressive for it before the last tax change. But, now it's not as easy. You can still do it, but it's not as easy.
So here's my question. What about this new news I saw? Like, a lot of times you see things online, you don't know what's true or not, but, sometimes people read into things and just, try to cause controversy about the W-4, saying that it doesn't matter whether you claim children in your W-4 now. That, like, with the new laws, it doesn't matter.
It doesn't.
Okay.
It doesn't matter because when they put through I'm trying to think of the law, the Tax Jobs and Cuts Act, which went into effect last year, basically got rid of all exemptions, right? Which basically your kids. You can only get some of the benefits for kids, like earned income credit, daycare credit, educational credit if they're in college. But when you are like before, if you had a large family, mm-hmm. you would get like $2,000 for each person that you were claiming, each one of your dependents. So it put a hampering on those big families. But what they did on the back end is that they increased the standard deduction. So if you're single, you now get $12,200 for a standard deduction. If you're married, it's doubled, right? You're married filing jointly, that is. It's now $24,400. I can't think of what it's married filing separately right now. And if you're head of household, when you run your household and you have a child or a parent that you're taking care of or a family member, that's like $18,350. Okay. Before it was much lower. So before you got your standard deduction and you got to claim all your kids. So if you got like 6 kids and you claim them all, you was eating.
Yeah.
And then plus it helps with earned income credit.
All right,
now it's not the same.
Okay. Leads me to another question you just brought up, because that was a question that we got in. If married, right, you can file jointly or you can file married, filing separate.
Right.
What is the advantage of either one of those, or what's the difference? Why would you do one versus the other?
So, well, let me back up, right? So it's tax season, right? And what is tax season? Basically, tax season is like the end of the year report card for your earnings that you got to turn into the government. And so the government wants to see what you've been doing all year long. And if everything kind of adds up together, you got to reconcile that number. I hate using that term because it's a technical term, but IRS wants to see if what you did all year long will actually line up with you being married or with you being single and with how many kids you might have. So it really plays a big difference. So if you're married and you're filing jointly, they tend to take out less money out of your check throughout the year. If you're single, they tend to take out more money throughout the year. But the question is, when people get these big refunds, my question is, what could you do better with that money throughout the year, as opposed to letting Uncle Sam, who was nobody's favorite uncle, hold that money throughout the year?
Mm-hmm. Yeah, so it's sort of like you, and I think a lot of people don't recognize that either. When you get those refunds, that was your money they were holding anyway.
Right. But
So
people
yeah,
do it as a forced savings kind of way. But I don't know that they're really cognizant and really thinking about it being a forced savings where the government's holding your money for you.
got you. Is there any advantage to being married and filing married and separate?
Not really. I take it back. There is, but they're in very extreme situations.
Okay.
For example, let's say, Jimmy, I don't know what your status is.
I'm married.
All right. So I can't. Corey, you married too, so I can't use this.
Yep.
But yes, I can. Married. So let's say both of y'all married, right?
Mm-hmm.
Y'all did some flips. Y'all made a whole bunch of money,
Mm-hmm.
and you're going to owe, and you're not prepared to owe. But your wives know that y'all ain't the best people with money, and so they say, you know what? I don't want to be messed up in your stuff and your nonsense.
Got you.
So we're going to file marriage separately, because in that way, you separate the tax burdens.
Got you.
In doing that, you lose a lot of opportunity. You lose a lot of benefits and credits, or potential credits that you could take advantage of.
But there's nothing wrong with doing that, though, is it?
No, there's nothing wrong with it. Actually, sometimes when you start dealing with like IRS debt and resolving IRS debt, which is something I'm really starting to do a lot more of now, it actually can help the person.
Okay.
Especially if you file separate, because it just makes things a lot easier, and it gives you a better footing when you're looking to dispute things against the IRS. So, everything is different for everybody. There are no cookie cutter strategies, though.
Okay, cool.
There's no good and no bad.
Okay, I got you. Another question was, so the question was, what are the advantages of being a business owner? And the way it was phrased to me is, everyone always talks about, you got to have a business. It helps you with your taxes. You got to have a business that helps you with your taxes. So I guess to keep it simple, is there any truth to that? And what advantage, should everyone have a business? Even if I don't, I don't plan on growing this business or scaling this business, should I have one anyway? Would it help me tax wise?
So that's always a tough question for me to answer, right? Because there's so much job shaming going on out here. But yeah, I think everybody can have a business, or should have a business, because it does help with the taxes. Even if you work a 9 to 5 and you got a side hustle where you fry chicken or bake cakes, right? One, it's an opportunity to bring in more money into the household. Two, you now get to write off some things that you weren't able to write off before when you're just a plain old 9 to 5 employee. If you use your cell phone, right, you're taking orders on your cell phone. Well, now you get an opportunity to write off a portion, not the entire thing, but a portion of your cell phone bill, right? Everybody's got one. Why not write off some of it while you're in the process of trying to make money? Mm-hmm. If you work out of your home and you have a home-based office, you have an opportunity to potentially write off a portion, again, not all of it. Some of these bootleg and jackleg people are telling you to write off all your house. You can write off a portion of your house, all right? You can write off a portion of your mortgage or your rent, potentially your real estate tax, your utilities, cable bill, so forth and so on. You wouldn't have that if you're a regular 9 to 5 employee. Matter of fact, even under the new Tax Jobs and Cuts Act, they got rid of what's called all the miscellaneous expenses. Before, you could write off things like working at home and stuff like that. Can't do that anymore. They got rid of all that. Even folks that are in the union that want to write off the union dues can't do that anymore. Wow. They got rid of all that. So now, I always tell people the biggest tax break is being a business owner or an investor, and especially a real estate investor. Because the big secret in real estate, especially if you're buying hold, is depreciation. I ain't going to talk about it too much, but Jimmy knows what it is.
Yes, sir.
Corey knows what it is. But, those are some of the things that you really get to take advantage of. And so it's better to be a producer, investor, than it is to be a consumer, i.e. a business owner versus just a plain old 9 to 5 employee.
What's interesting about that, right? I was looking at something today. I was looking at how the deferred compensation limit went up again, and it shocked me. I didn't know. I just happened to be reading something it went up again, and I feel like they're telling us like with these tax law changes and with them continuously increasing, like, deferred compensation limits, they're telling you basically you better take care of yourself, right? So they're giving you all the advantage you need to know. I'm not gonna get into Social Security and all that, but it's just interesting to me that when you see these limits go up, the Roth went up a couple years ago. Like everything's they're giving you more opportunity to take care of yourself, to do for self.
Right. I mean, the tax law basically tells you what to do.
Yeah.
But for the most part, I do, because you asked me another question and I don't feel like I answered. You said, should everybody be a business owner?
What I meant by that is not necessarily because I'm not into job shaming either. Because my thing is, again, going back to the cash flow quadrant, what I recognize by reading that book is, it's all about being strategic. You can operate from any of them as long as you're always in the eye. So even if you have a job, like who am I to tell someone who has a job making $500,000, like, but you don't work for yourself? Like, dude, you make $500,000 and you got a portfolio of $8 million. Like, who am I to tell you that that's stupid? Right. Like, it's all about everybody always operating in the eye. But my question is if you are an employee, could you just have a little side hustle that could help you tax wise, but also bring in more income? So you did kind of answer it though.
Okay.
Right. Like you can fry chicken or sell cakes, just do anything on the side, but it also
something real simple.
But it opens up other things for you, and I think that was a great answer actually, because and your example was great too, because I might sell a couple platters in a weekend, but that opens up me to be able to write off my cell phone. Right.
If you like me, I love the grill. Right. I don't have a grill right now, and I'm feeling a little out of sorts. But if I start catering, I could go buy me a grill, and I can justify because I want this real expensive one, and I can write off a portion of that for my business.
That leads me to the next question, which is a funny question someone asked. They said to ask you, what is the craziest thing you've ever seen someone try and write off? Where you just like, look, come on, man, cut it out. And I know you can't give it like personal information to your client. I'm talking about
but I got examples. But
what's the example of something that someone tried to write off when you just you're like, come on, dog?
I mean, it's kids.
Somebody with 15 kids or something.
So listen, I mean, last episode we talked, right, and I told you how I was never really super gung-ho about tax business. Part of the reason why is I had this really bad experience when I was running my dad's office. I had a young lady, she had been a client of mine for years. I thought we were friends. But every year she would pop up with new kids. And so the third year, I started to dig in a little deeper because it was always like the story of my aunt got sick or my sister got sick, so I'm taking care of their kids. And so I tried not to be as judgmental as possible. Like I know people go through stuff. So I didn't really look at it that deep, like year one or year two. And then year three, the universe kind of just told me to ask the follow-up question. It was like, well, is this kid your kid, a foster child? Did you adopt him? She was like, a foster child. I was like, okay, well, where's your paperwork? She had no paperwork. And I'd already did the tax return. And so we wound up getting into, I want to call it a quasi-fight, pseudo fight, because she called her boyfriend. Her boyfriend comes to my office screaming and hollering. He comes in like he wants to attack me. Called my employee at the time the B word. I wound up paying him to leave and just getting out my face, but that really set me back in terms of the business because I didn't like that experience. And so to me, that was one of the craziest things I've ever seen. But people are always trying to write off meals, right? Like meals like that they went to McDonald's on their own. So the rule is you can have a business meal, right? You get to write off 50% of that meal.
Okay.
Because the meal's supposed to be for you and at least one other business associate talking about business.
I remember Kyle Barker on Living Single. He was out in the restaurant and he was like, y'all saving money? And they said, yeah. He was like, cool, this is a write-off. he just asked them, y'all saving money? They said, yeah. He was like, cool, this is a business lunch. But
okay, I gotta go watch that. I remember that one.
Yeah, it was on Living Single. That was my thing.
That's kind of dope.
That was my thing. That was my thing back then, Living Single. But anyway,
I love it. As a sidetrack, I just watched Erica Campbell talk about how Living Single was actually the inspiration for Friends. I didn't know that.
I did. That's another thing that they took from, but that's either here or no. That's a whole nother.
But it's interesting because when you think about it, the whole show is actually modeled after.
Yes, it is. That's
funny.
That's an aside, but no, that reminded me of that when you said that because I always found that clip funny because he literally just asked me, "We're out at lunch." He was like, "Are y'all saving money?" He said because he was a banker. And they
Right.
said, yeah, we're saving money. He was like, this is a write-off.
Right.
But anyway,
But yeah, you can only write off 50% of the tab, right? And one of the things people do is they, like you said, it is go to McDonald's. I mean, I literally had a client the other day say, I took myself to lunch and I'm doing work at my business lunch. I said, but it's you. You would have to feed yourself anyway. The IRS knows that. So when you bring me this $10 bill from McDonald's, nobody's really going to believe that if you ever get audited. So, I see that a lot. And then sometimes I see people like go to bars, right? Because I go through people's books, right? I see them going to bars. I'm like, this ain't a business expense. This you out kicking it with the homies or with some shorty that you trying to
Yeah.
trick off with. But it is what it is.
they try it though.
Yeah, they
At
try.
least it's funny how all your questions like are leading to other questions that people ask, which was one was about audits. How do audits work? Is there like one audit that everybody goes through? Or are there different types of audits?
Oh man, well, there are different types of audits. I actually did I did an interview with an ex-IRS agent, and she broke down all the audits for me. Like there's a correspondence audit when they just send you a letter and you have to respond. Sometimes I think they call them field audits when revenue officers and agents will stop by your place of business or your house. And the crazy thing is, right, audits have been down for a while. And actually, audits have been really by the IRS. Audits have really been focused on the poor folks or the less economically, more economically challenged.
Why is that?
Simply put, the poor folks don't have the ability to challenge.
They
don't fight back.
Right, yeah. They don't fight back.
I don't know why I asked the question when I could ask, but I mean, to me, that makes no sense business-wise. Like, what are you getting out of that?
That's part of it, but that's changing. That's changing. So IRS has got a new commissioner. The IRS commissioner has stated that they're going back to enforcement. Matter of fact, today I was talking to another fellow accountant. They had one of their clients got an IRS revenue agent stop by and see them. Wow. And so enforcement is coming. I mean, there's a lot of people that owe the IRS money and they coming to collect. So my advice is that anybody that owes bread to the IRS, don't ignore the letters.
Erwin R. Shyster coming after you. Listen, because in the movies and pop culture, they make it seem like that's what all the audits are. Like somebody gonna be knocking. There's a whole team of people knocking on your door with they pulling up in Suburbans. You know what I mean, with the earpieces. That's how it is in movies and pop culture. But in my I've never been ordered, but I have people that have been ordered, and they told me like they just got a letter and had to send something in, and that was it. I was like,
that's probably the more popular.
Yeah, that's not how it is in the movies, but that's why okay.
But I would say don't ignore the letters, handle them, respond to them. But going back to what you said, yes, most of them a lot of times are correspondence audits. Anybody can get audited, right? So sometimes people like to blame their tax professional for the audit. Sometimes they randomly pick people to be audited.
Okay.
Sometimes they'll go through in random areas and they'll pick them.
So it could be random.
Yeah, it could be random. You can also draw red flags. Like, for example, if you made $20,000 in your business and you consistently say that you have like $200,000 in losses, you probably asking for it.
And that's interesting though, because I know with the softwares these days, they tell you when you're like, when you basically
like why would you
to put it in Philly terms, they tell you when you're drawing, right?
Yeah, pretty much.
Yeah, they tell you like, you're doing too much. But
the problem is with the softwares, like I'll just say it, TurboTax. They go through and they ask you a bunch of questions, but sometimes people don't know how to answer the questions. And so I fix people's TurboTax problems all the time.
Mm-hmm.
And there's nothing wrong with TurboTax. And even if you don't make a whole lot of money, there's other low-income sites out there called the VITA program that you can get your taxes done for free. But again, a lot of times people don't realize that they're making a mistake. Yeah. And they think that I'll keep it very funky with you. Some tax returns are very simple. Mm-hmm. Some people shouldn't pay to get their tax returns, especially if they can read and they can count. Yeah. It's not rocket science.
Yeah.
However, once you start getting into the business and some of the rental properties and some of the trading and things like that, it gets a bit more difficult. But if you're a college student and you just you made $5,000 and you made paid $400 in taxes that year, you probably can figure out how to do the tax return.
And you can't even really go by like income either, right? So I was talking to a gentleman who worked at one of the like Jones Lang LaSalle, one of the big commercial real estate guys.
Right.
He makes a nice piece of change. He makes like 200 and some change, but he literally has his salary, his mortgage deduction, and that's it. Like, so because we talking about taxes, he was like, I don't have anything. Like, I don't have he doesn't have anything. Like, so for him, it's just it's very simple.
Right. He's a guy that should go sell chicken on the weekends.
Yeah.
So he gets some deductions.
Yeah, but
there are a lot of people like that. He's a high income earner. People ask me all the time, I'm a high income earner. What should I do? How can I strategize around that? I say think about starting a business, because everybody don't want to start a business.
Yeah.
Everybody don't want the responsibility. Potentially buy some real estate, max out your 401k, potentially look at life insurance or put money away so you don't get taxed on it. There's some things you can do. But the majority of the advantages go to business owners, investors, and like I said, especially real estate investors.
Yeah, we're going to get to that too, because that's a great point. A couple more questions. We got a couple more questions left.
We good.
You answered about the audits. Someone said if you have a business, you have the ability to pay quarterly. Like, what are the benefits of doing that versus just paying annually or doing what it is on? Is there any like special advantage of doing the quarterly?
Well, you're complying with the law if you pay it. So they're talking about paying estimated taxes quarterly, right? Mm-hmm. So the IRS wants people who are in business or real estate or might have had a huge lump sum to pay their taxes quarterly. Because the IRS, again, we fund the government. The government doesn't want to wait on their bread, their money. They want it now. Pay me now. All right. So you can do that. I actually advise, especially some of the smaller, like 1099 people who are getting money that don't have a lot of infrastructure to pay monthly, because people tend not to be able to hold on to large portions of cash without spending it on inappropriate things or the wrong things. Well, I tell them to try to get it out their pocket and pay it monthly. You should pay it. The IRS will actually give you a penalty if you don't do quarterly payments and they see you have, a lot of money coming through that should have been taxed throughout the year. Because it's not a large penalty, but it's still a penalty. Why pay it if you don't have to?
So you're saying that so technically speaking, you're supposed to pay quarterly taxes.
Yes.
You're generating income. Okay.
Yes.
All right. So all right, man. I didn't even know that myself.
Yep.
Like, yeah, like I own businesses, but I pay annually. Like I don't, you know what I mean? Like,
yeah. When you look on your form, you'll see that if you didn't pay, there's a little penalty there to do it.
Interesting.
Plus it's good planning, right?
Yeah.
You don't want, if you're not doing any of the other, tax write-offs, retirements, one of the bigger ones. If you're not keeping good books, you don't know what your profit is. It kind of behooves you to pay off some of that debt throughout the year.
Okay. All right, man. And that leads to one last question, but I have an add-on to that. But this last question, because you just mentioned something, and the last question was actually about a 1099 employee. And the question was, if you're getting paid and they're not taking federal withholdings or anything of that nature, what percentage of the income should you be putting up for taxes?
So my rule of thumb is 30%. I know sometimes that's a little hard for people to do, but I'll say 30%. Because again, at the end of the year, they're going to want you to reconcile. They want you to do your tax return, and you don't want to wind up owing at the end of the year when you bust it right after Christmas. So I would say 30%.
Got you. So another question I just thought of as I was talking to you. So I know you have a lot of knowledge in reference to investments. And I know you're a stock market guy. Some guys are stock market guys, some guys are real estate guys. And listening to you
done it all, but yeah, I prefer the stock market.
Yeah, and listening to you talk, it just occurred to me, right? So you have traditional IRA, Roth IRA, whatever it may be. But does it make sense to max out, say, a 401k or deferred comp or something that will lower, not necessarily lower your income because it's still but it's coming out of your gross? Does it make sense to max that out first before you start to fund an IRA? Would that help you tax wise? Right. Now, I know that you can write off a traditional on your taxes versus a Roth.
Right.
And just something, and listen to you speak.
Well, sometimes you can write off a traditional.
Okay.
But if you already have a pension or 401k plan, you can't.
Oh, okay.
Yeah, so that's double dipping. But
So hold on. You're saying that if you have, when you say pension plan, you mean a 401k pension or just a regular pension plan, like a government pension plan?
both.
So if you have a government pension, you
I
can't
gotta
write
go
off.
read the statute again, but
Okay.
if you already have a retirement plan in place, you usually do not get the tax deduction for the IRA.
Oh, interesting. Didn't know that. I'm learning all kinds of stuff. This is interesting.
Hey,
Here's the
man,
thing.
I have a question too. I know a lot of people who do high frequency trades. As far as the stock market, what would you suggest for those kind of people for doing their taxes?
Well, they should be good because your broker should have all your records. They'll get a bunch of 1099Bs. I'm always curious about, because if they're high frequency, they're using a computer and an algorithm. So is it them doing it, or are they actually using a computer and an algorithm?
I know both kinds.
Okay.
So I know people who are doing 5 to 6 trades a day on their own, and then I know some people who are using a computer.
Right.
Yeah.
Well, in either rate, you can. There's a lot of write-offs you can take advantage of, and if you're just a cat, because you can be a professional trader, and when you're a professional trader, then you're treated like a business owner instead of more of a passive one. But when you're a professional trader, you get the write-off just like a regular business owner.
Okay.
You get the write-off, everything that what IRS says what's ordinary and necessary to run your business.
Yeah, for your business.
Right. Yep.
But getting back to my question though, just all right, because I'm thinking things through as you give me more information. Does it make so that in that case, it still makes more sense if you are employed and you have the option of a 401k or a 403b or a 457 or one of those deferred compensation plans? It sounds like it makes sense to put as much in that as possible before you even get into any other investments.
Sometimes. So again, somebody try to call.
I know it's not a one size fits all thing.
Right. And they be mad. They Camari, you always say it depends. It depends. Well, it does. And yes, that's my favorite answer. It depends. But I'll say this. Sometimes I tell people not to invest in their 401k. So if you if you don't have a lot of cash and you're like really struggling paycheck to paycheck.
Oh, yeah. Okay.
I run into a lot of those. And if you're putting all your money into this retirement vehicle, and if you have an emergency, you're going to have to pay the penalty to pull it out. And so you're creating a tax burden for yourself.
Yeah.
So, but, I just wanted to list that caveat. But yeah, most times I would say put money, especially if you're a high income earner, put money into your 401k first because it's going to help bring down your tax bill. Plus your money gets to grow tax free. You do have to pay money to pull it out later on. And you might want to look at some other strategies like backdoor Roth IRAs and things like that. But for the most part, yeah, I would say max out your 401k if at all possible.
I do have another question about the Trump tax law, but you just brought up another question. And any people I talk to in the financial services industry, man, they either love it or they absolutely hate what I'm getting ready to ask you. But I want to see your opinion on this.
I thought you said they love or hate.
No. Here's what I'm going to ask you. What is your opinion on using insurance as a way to help you? Well, first of all, using insurance as an investment, which is one question, and to help you in terms of your tax strategy.
It depends.
How did I know you were going to say that?
I mean, you set me right up for that, right? So I'll say this. People have brought up a load of insurance for me when I used to sell it. I've done all kinds of things with it. People have used it as investment tools. Some of my financial coaching clients, I'll recommend it to them when it's appropriate, when you have adequate cash flow. It can be a good use for retirement savings. There's a lot of people out there now promoting using life insurance to create your own bank, which can be good or bad depending upon the individual situation. I see sometimes people pitching build your own bank to people that are making like $30,000 a year. and they don't realize that again, you're putting, just like the 401k scenario, you got these people who don't have a whole lot of cash putting their money into a vehicle where they might get charged a surrender charge, right? So basically, if you put $100 in, you can only pull out like $95 or $94, and just ratchet that up to whatever level you've already put into it. And you have to you're subjected to that over a number of years. So again, you got to be really careful. But if you got great cash flow, you got great savings, absolutely, it can be used as an ultimate savings vehicle. And I mean, if you look at it, I wrote a piece. A lot of big institutions have used life insurance, cash value life insurance, to either sustain their operations or get their operations started. I know Ray Kroc, the big promoter of McDonald's, after he stole it. He stole it from the Kroc brothers.
The founder.
Yeah, the founder, right? But he used his cash value life insurance to keep McDonald's up and going at one point.
Yeah.
And there were several others who've done the same as well. So again, I mean, but I think first and foremost, when we talk about life insurance, let's get to its intended use. Its intended use is to replace income of a loved one that may not come home tonight or tomorrow. If it's like a Kobe Bryant, right? Or if it's like any of the other people that fell in that helicopter crash.
Yeah.
And that their family can be taken care of because they're missing an income after, someone passes away. It's important. Do that first before you do all the other fancy stuff. Like people don't like me a lot of times because I'm talking about sticking to the fundamentals. Right. And they say,
well, they don't want that. They want the fancy stuff. They want the fancy stuff.
They say, well, Camari, you the finance rebel. You're supposed to be talking about the sexy stuff. Yeah, but listen, you can't do the sexy stuff until you got a foundation. Get your foundation first, and then let's be sexy all day long.
People get on me when I talk about my portfolio, and I'll tell them how boring like most of my holdings are. You know what I mean? Because I don't have the flashy tech companies or the IPOs. I don't do all that. You know what I mean? So I understand what you mean. Like,
right. Tell them what Warren Buffett says. I want to invest in a company that can be run by a monkey or a bologna sandwich.
Absolutely. And I love my dividends. But now, it's interesting you say that, though, because that is the intended use of life insurance. But a lot of times, and one of the reasons like we like to have our platform is that there's so many like games out there that are being played and people are a part of, whether they like to know it or not. And a lot of times we don't know the rules. So a lot of times people don't understand that there is a way to be strategic with life insurance and use it, but it's not for everybody. Like you said, it's someone who has cash flow or high income, not someone who's living check to check per se.
Right.
Yeah.
I'll say this because you asked about business owners earlier. Normally, you cannot write off life insurance, right? But if you're a business owner and you're like a solo business owner, or maybe you and your wife, there's a way to write off life insurance. But a lot of people don't know that.
You talking about like what's the key person's insurance?
Nope.
Oh, okay.
I ain't giving that away today.
Okay.
I'll say this: if you buy life insurance through a retirement plan, it then becomes tax deductible.
Got you. There's so many different like strategies out there. With insurance, with like the whole idea of deferred compensation. But you're right; you have to have your fundamentals together.
Yeah, absolutely.
Man, you gave us a lot of information, a lot of gems in that. I learned a lot myself, and I want to say thank you for that. But the main question that people ask are Trump's tax laws. If you can kind of surmise what that did, and maybe give us a negative and a positive. Like, is it all negative or is there some positive to it?
It's funny. I got asked this question last year on 10, and I've been thinking about using that footage because they only put like 30 seconds of me up there, and I didn't really get a chance to put out exactly what I wanted to say. So I'm glad you asked me that question. So it's good for corporations. It's good for the uber rich. It's halfway good for the poor. The people in the middle are getting screwed royally, right? They're only able to write off, it's called SALT, right? So they're only able to write off $10,000 of their state and local tax. Within that state and local tax, you're going to talk about real estate taxes as well. So if you make $100,000 a year, which you're not poor, but you're not rich, and you live in a house that might be worth, I don't know, 150, 200, 300,000. Between your real estate tax and your state and local taxes, you're paying more than $10,000. So you're losing part of that benefit. Again, I talked about this earlier, if you have a big family, you got 5, 6 kids, you lost some of those exemptions. They did increase the standard deduction, right? And that helps a lot of people at the lower end that don't own homes. And let me back up, right? Because you can have a standard deduction and you can have an itemized deduction. So the SALT and all of that, what I'm talking about, the $10,000, that comes into play when you have an itemized deduction. you get an itemized deduction, or you can be eligible to itemize your deductions by exceeding your standard deduction. So like I said, a single person standard deduction is $12,200. A married person standard deduction is $24,400. So your itemized deduction doesn't come into play until after you exceed those levels.
Okay.
So Trump made it harder to exceed those levels, but at the same time, it's kind of a good thing too for people who don't have a whole lot. If you don't go to church, right, or the mosque or a synagogue, and you don't contribute a lot of money to charitable organizations, a college, or like the United Way or something like that, because those are things that are itemized deductions. That's one of the things.
Now, my question is, did it simplify the tax code at all? Because I know it's one of the things that him and his
about the whole postcard.
Yeah, the whole thing was they're trying to simplify it. Did it?
No, I don't think so. And most of my other tax advisor friends don't feel that way either.
Okay.
So now we have more forms, right? So before you just had a basic 1040 form, and then you had like some of your other supporting forms, like your Schedule A when you're itemizing deductions, your Schedule C if you're a business owner, your Schedule E if you have rental property or royalties. Now you have like Schedules 1, 2, 3, and 4, and you still have Schedule A, C, D, and E, and all that other stuff. So they, in my opinion, they made it more complicated.
Oh man, I was for Herman Cain when he said 999. We're gonna really simplify this thing. Everybody just pay 999. Anyway,
Herman Cain wasn't never gonna win, but that's okay.
I just remember him saying that we're gonna simplify. He said it's way too complex. 999. That's
hey, listen. Man. I mean, people don't understand this, and my taxpayer friends hate me when I say this, but my job wouldn't exist if it wasn't for the government. My business wouldn't exist if it wasn't for the government. Government can make tax preparation so easy because they got all the numbers anyway, or they got the majority of the numbers. So they can send you a pre-filled form, and we can do that. That's what most developed nations do. And it can save a lot of people money. But guess what? The accounting and tax lobby is very strong.
Lobbyists are not going for that. What's
right.
the big one? KPMG, whatever the big one is.
Well, KPMG is an accounting firm, but there's a lot of them. There's a lot of them. You talking about Cake Street, Street, you see? Because
it used to be They used to be the Big Five or something like that.
Yeah.
And well, that's accounting firms.
Accounting firms. But I'm saying but what I'm saying is those accounting firms are the ones that fund a lot of the lobbyists.
Yes, absolutely. Yeah. And it was the Big Eight.
The Big Eight. What's it down to now? Because I know they were swallowing each other up. So what's it down to now?
The Big Three or the Big Four.
Sheesh.
Yeah.
Yeah.
Some of them died through scandals, right? So if you remember Enron, if you remember Arthur Anderson got beat up pretty bad in that one. There was a lot of them. A lot of improprieties. A lot of greedy people out there.
Absolutely. So you're saying greed isn't good?
So I love the line in Wall Street where it says greed is good. One of my favorite movies, but typically no, greed sucks.
Yeah, no, I'm just being smart, man. Listen, man, I just want to say thank you. You're giving us a lot of knowledge this evening, man. I got a lot of game myself, a lot of things I just didn't know. And that's the thing, like that's not my specialty, right? So everybody has that. So even if you're in, quote unquote finance, a lot of times you don't know about taxes is a thing that I think a lot of people don't understand how it can help you build wealth.
He said in the beginning, if you don't have a tax strategy, you don't have a wealth building strategy. Like that's the realest thing in the world. If you don't have a tax strategy, you do not have a wealth building strategy.
And to me, what's interesting in hearing you talk is it's like a moving target. Like the politicians come in and change, tax laws change, and and I guess they do that to keep people in business. Whatever the reason is. Whatever your strategy was 10 years ago may not be the same strategy you need to implement 10 years, now or right now, rather. So it's like a moving target.
Just understand that you have to update it. Like real estate. So think about it like this. This country was founded on entrepreneurs, right? George Washington and his old apple tree and all that, or peach, whatever it was, right? They didn't steal the country from England just because they wanted to. They stole it because they didn't want to pay taxes.
Yeah.
And so everything in the system is about money, about entrepreneurship, about land ownership. And so as long as you line yourself up to benefit from that, I think you got a head start.
Yeah.
A lot of us are starting behind the 8 code because we think that, and I'm talking about our community now, but we think everything is about a job. No, because the job isn't necessarily an incentive when you talk about doing taxes unless you are an employer. But here's the thing, like the one thing I want to leave everybody with. Yes, you cannot have a wealth building strategy if you don't have a tax plan, tax strategy. But you cannot, I repeat, you cannot do tax planning at the December 31st, 2008. You can't do tax strategy at December 31st. So you should be talking to your accountant, your tax pro, multiple times throughout the year and sit down. Don't try to pick their brain. Pay that person, pay that lady, pay that man, and get your tax strategy. You should get what you pay them should be pennies on the dollar.
Mm-hmm.
And so pay them. You gotta spend the time. You gotta do the unfun things. I can't tell you how many business owners I talk to who have terrible books. They want to do tax strategy on March 31st, and income tax is due April 15th.
Yeah,
right.
They pull up with a like a shoebox full of receipts,
right,
and say hook me up, as opposed to like focusing on it like year in and year out.
They want a Cinderella. They want a Cinderella story with their taxes. They waited till midnight to file, but they didn't do the prior work. Ain't no magic slippers.
Yeah.
You gotta do the work. You gotta do the work.
Yeah, and that's the thing. I guess like once you do the work or whatever, year after year, it should become easier, right? Like you still have to do your check-ins or what have you, but
right.
It's about getting it started, man. So listen,
but isn't it funny? This last thing, but isn't it funny, right? I just want to say with Kobe passing, right? He talked about Mamba mentality. It was all about doing the work, and as you do the work and you're serious about the work, it becomes easier.
Yeah,
and that doesn't mean you won't have challenges, but that correlates to everything in life.
Absolutely,
doing the work,
it definitely does.
You create a foundation. Once you have that foundation, you can then create leverage, but you got to do the work.
Absolutely. And the last thing I want to say is you mentioned something that's very interesting too. In reading a lot of personal finance books, you always hear them talk about like when it comes to taxes, how taxes are nothing but an incentive.
Yep.
Right. Taxes tell you exactly what the government wants you to do. So you follow the tax laws and do what they want you to do. The government will take care of you.
That's right.
You know what I mean? Like, and a lot of times that's why real estate holds such a special place for a lot of people. Because it's not necessarily that real estate is better than this or better than that. It's that the banks and the government have a different relationship with real estate. So,
well, if you look at real estate, and I know we're over time, but if you look at real estate, right, the other thing I always try to impress upon people is the multiplier effect. I know that sounds super technical, but it's not. It's basically if you put $1 into it, can you get 2? Can you get 3?
Mm-hmm.
People know that real estate has a phenomenal multiplier effect.
And that's what I meant by the bank's relationship with it.
Right.
I can go to the bank and say, "Hey, I want to borrow money. I want to, I want to sell, water ice." Or I could tell them, "Hey, I want to buy this building." It's a whole different relationship.
Absolutely.
You know what I mean? It's a whole different relationship that they have.
But even when you look at it from the government's, right? So the government always wants the economy to run and run strong. Real estate, just the building of real estate creates how many jobs?
Exactly.
Making the foundation, the pouring the sheetrock, the concrete, to framing, and then hanging sheetrock and running wires and running pipe, putting roofs. I mean,
all the trades, the electricians, your plumbers, your carpenters.
Everybody eats.
Everybody eats.
Yeah, so it's its own sector.
Right.
And,
so if you have a strong real estate sector in your country, you tend to have a better, healthier economy. And that's what the government wants. So like you say, you got to go along with the government.
Yeah. And this is where most stock people say, but you can own real estate on the stock market.
I mean, you can.
No, I know you can. But I always find those debates interesting, the stock versus real estate debates. They're always interesting, man. I say do both, but that's just my personal opinion.
Well, I think it's levels, right? I think if you really want to get into real estate, and I've been meaning to do a video on this, you can go buy some REITs or some developers in the stock market. But $1, right? Mm-hmm. You can build that money up, and then you can go buy a property. I've got several clients who've done that, either a property or started a business, but they use the compound mechanism of stocks and dividends to do that. You got to play the game smart.
That's right. And that's what it's about. It's about understanding the rules and playing the game. Camari, we just want to thank you, man. We're gonna have you on here again before the year is out, man, just to debate something because we like debating with you, man.
Pretty much.
We don't debate today.
No debating today. But we do always love chopping it up with you because you always give us a different way to look at and think about things when it comes to this finance game. So that's always a positive, and we always learn from you. So I just want to say I appreciate you, man. And for the folks out there, we'll make sure we put all of his contact information. Check a look at what he's got going on online too, because he has one of the best Instagram pages there are. You know, the financial.
And his YouTube page. His YouTube page is fire.
Yeah, absolutely.
His YouTube page is fire.
Yeah, so we're gonna put all your links in there, man. And just want to say thank you, man, because I feel like this is February now, so people are gonna be going around. You know, now they have some questions, some things to talk to their accountant about. So thanks for all your knowledge, bro. We really appreciate you, man.
I'm honored, man, and I appreciate y'all. I appreciate what y'all doing. Y'all Instagram game is fire.
No doubt. Appreciate
You're
that.
on the same wavelength sometimes, but for some reason, y'all always beat me to the punch. I don't know.
Yeah, we be in our bag, man. But listen, though, for the folks out there, follow what Camari's got going on. You know what I mean? So if you have any more questions, you can actually hit him up too. And just make sure that you have some sort of plan. That's all we're saying. Like, we want to make sure we bring people on that can give you information, because if you don't know the rules to the game, then, you know, you're really out there. Like, you can't play a game without knowing the rules. So we want to say we appreciate you. Make sure you share this video, hit the like button, subscribe, do all the great things. But make sure you share this content the same way we share our ratchet content, which I don't have no problem with. I like watching that too. But just share this content as well. And as we always say, it's not about how much money you make. It's about how much you keep. Game elevates, man. And we'll see y'all in the next episode. Peace.